Decisions and deliberations of the Monetary Policy Committee, MPC. The Monetary Policy Committee, MPC, met on 5th, 6th, and December 7, 2022. Based on an assessment of the macroeconomic situation and its outlook, the MPC decided by a majority of 5 members out of 6 to increase the policy repo rate by 35 basis points to 6.25%, with immediate effect. Consequently, the Standing Deposit Facility, SDF, rate stands adjusted to 6% and the Marginal Standing Facility, MSF, rate and the bank rate to 6.5%. The MPC also decided by a majority of 4 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward, while supporting growth. Let me now elaborate on the MPC's rationale behind these decisions on the policy rate and the stance. Growth prospects across the world are dampening. Financial markets remain nervous and are characterized by high volatility and price swings. For the Indian economy, the outlook is supported by good progress of rabi sowing, sustained urban demand, improving rural demand, a pickup in manufacturing, rebound in services, and robust credit expansion. Consumer price inflation moderated to 6.8% YoY in October as expected, but it still remains above the upper tolerance band of the target. Core inflation is exhibiting stickiness. While headline inflation may ease through the rest of the year and Q1 2023-24, it is expected to rule above the target. The medium-term inflation outlook is exposed to heightened uncertainties from geopolitical tensions, financial market volatility, and the rising incidence of weather-related disruptions. On balance, the MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break core inflation persistence, and contain second-round effects. These actions will strengthen the medium-term growth prospects of the Indian economy. Accordingly, the MPC decided to increase the policy repo rate by 35 basis points to 6.25% and to remain focused on withdrawal of accommodation, while supporting growth. As regards the stance of monetary policy, the MPC took a holistic view of the policy rate and liquidity conditions relative to inflation. Adjusted for inflation, the policy rate still remains accommodative. Over the next 12 months, inflation is expected to remain higher than the 4% target. System liquidity remains in surplus with an average daily absorption under the Liquidity Adjustment Facility, LAF, of 1.6 Indian rupees lakh crore in November 2022. Since then, it has gone up to 2.6 Indian rupees lakh crore as on December 5. The overall monetary and liquidity conditions remain accommodative, and hence, the MPC decided to remain focused on withdrawal of accommodation.